Hi guys, can you guys hear me? Good morning, good afternoon, good evening, wherever you are. Welcome to the webinars. Can you guys hear me so far? Okay, let's just wait for a couple more minutes, okay, for everyone to tune in, and then we will start the section for today. Okay, so far, any one of you guys using Elliot wave to trade, you can share with me, okay? Today it just talks about the prep clause, how to use Fibonacci, and maybe some of the rule for Elliott wave that you need to know. All right. Can you guys hear me so far? I believe you do. Okay. Hmm. Hi. All right. Thank you. Okay, I think I will start within 1 to 2 minutes. Okay. So far, any one of you guys already use Elliott wave to trade, or you guys never ever use Elliott wave before? You can share with me. Okay. Now I'm looking at the the chart, and I think today just now before the session I was looking at the chart, and then I tried to find the Elliott wave example for you. So I think now I find one or two of them. Okay, in the USD JPY and gold. Okay. Okay guys, so I don't want to keep you guys waiting. All right, let's just start our session for today. Welcome everyone again. Today we're going to cover Elliot's web prep course, like know your Fibonacci level. Okay, and the disclaimer as usual, guys. Remember that, all right, everything in this video is educational in nature. Okay, nothing should be construed as investment or trading advice. If you guys want to trade, please do your own due diligence before you guys trade. Okay, about my today what we're going to cover is why is Fibonacci important for Elliott wave, key Fibonacci levels, and maybe we will go just a little bit of recap Fibonacci retracement and Fibonacci projection, because we will use this tool to help you to to find the next wave Okay, I will show you guys later. About myself, my name is Peggy. I'm a trade analyst at Ever Fraudulent Group. Some of you guys already know me. I'm a prop trader as well. Okay, so this is some certificate that I part of the challenge. If you guys want to try, you can just Google and check it out. Okay, and why Fibonacci important for the Elliot wave? Okay, let me get it out. So basically, Elliot wave is related to one another according to Fibonacci ratio. Fibonacci ratio are useful to measure the target of the wave move. Like, you know, they can help you to predict what is the next move gonna ending. Okay, I will show you guys later as well. This can help the trader determine a good entry level and a profit target. Usually, you know, if you use the Elliot to trade, you know, you can help you to predict the profit target, how it look like. Okay, there's a key Fibonacci level that you have to take note. This is just a guideline. Okay, it's not necessarily that it's gonna, like, you know, ending with this number. It's just a guideline for you that you might need to know. Okay, so basically Fibonacci ratio is useful to measure, like I say, the target of the wave move within the Elliott wave structures. Okay, like wave 2. Okay, this is wave 2. Okay, is typically 50%, 61.8%, 78.6%, or 80.6% of wave 1. So basically, you need to draw Fibonacci retracement. This is a starting point. You draw Fibo and then have to retrace somewhere between here, between 60% to 88.2% of wave 1, which is this a wave 1. What about wave 3? It is wave 3, typically 161.8 of wave 1, or sometimes it could go up to 261.8%, okay, of like of wave 1. Okay, and what about wave 4? This is a wave 4. It typically between, meaning, like, you know, retrace from here, 14.6 to 38.2% of wave 3. So this is a wave 3. You draw Fibo from, like, starting point here, ending point, and then you wait for the price to retrace. Okay, 14.6 to 38.2% of wave 3. Okay, what about wave 5? This is a wave 5. It typically equal to wave 1. This is a wave 1, or 61.8% of wave 1 plus 3. Okay, how is look like, or how you're going to draw, I will show you. Okay, so okay, let me try to give me a while. Let me see if I can copy this the one. Okay, all right, so in the trading view, okay, if you want to draw, okay, this is the wave. Okay, you guys can see right so far. Okay, and then in the trading view over here, we will use Elliot impulse wave, which is 1, 2, 3, 4, 5. Okay, just to show you how to draw. For example, they said that wave 2 is typically retrace 50% to 80.6% of wave 1. So basically, if you draw Fibo from, like, starting point, ending point over here, okay, they should retrace between, like here, 50% to 78.6 here, or up to 88.6%. Okay, this is somewhere here of wave 2 or wave 1, sorry. So basically show you again. Okay, 50%. Okay, 50 is all here. And what about wave 3? They say that typically 161.8% of wave 1, or sometime it could go up to 261.8% of wave 1. So basically this time we're not using a retracement, we are using projection. Okay, you still remember projection, we're using this one, a trend rate fib extension. So basically you draw Fibo extension, and this is wave 3. Okay, this is wave 3, 161, but sometime, okay, it could go up to 261.8%, which is it could go up to here. Okay, but in this case I just put at 161.8% for you to see first. And what about wave 4? Retrace 14.6 to 88.2% of wave 3. So basically you draw retracement, okay, from number 2 starting point and ending point is wave 3. Retrace. Okay, let me move this one, you not get confused. 23 to 38 should be somewhere here. Okay, we just like in this box, right, for the wave 3. Okay, what's about wave 4? Oh, sorry, wave 5. Here they say wave 5 is equal to wave 1, which is 100%. You can use Fibonacci projection. Okay, I think 1, 2, and projection is right. It's not. Let me, sorry. Hmm? 100% here, 100%. Okay, 100% is here, projection. Or you use wave 1 plus wave 3 is 61.8%. You can use like this: wave 1, wave 3, and wave 5. You will get 61.8%. Is somewhere around here. Okay, this is how you get a wave 5. Okay, and now we back to our slide. This is quite straightforward, I believe. And there is a rules, okay, that you need to remember, okay, for you to, like, you know, get the correct wave, which is wave 2, okay, cannot retrace more than 100% of wave 1, meaning that starting point here cannot retrace more than wave 1, which it cannot go below here. Okay, so if like that, we're not going to count at the 11th wave. Okay, that's the rules you need to remember. And wave 3 can never be the shortest of the wave 1, 3, and 5, which is this one, meaning that wave 3 can be shorter than wave 5, but cannot be shorter than wave 1. Okay, and wave 4 can never overlap or coincide with wave 1. What does this mean? It will draw the dot like that. Okay, yeah, meaning wave 4 cannot go or overlap wave 1. Okay, this is a golden rule. These are rules that you need to remember. Okay, any questions so far, guys? Okay, more of logic of those rule pitch, such as why you mean this rule. Okay, this is the rule. Okay, this is the rules, which is all here. Let me bring you back to the chart. I will copy this and maybe I show you in like charts here is better. So the rules, if you want to use Elliott wave to trade, you need to remember all these rules. Okay, it's over here. They say like what I say that, for example, okay, this is wave 1 starting point, and maybe I just put it like the X, okay, like the X number. Oh, I put X here, meaning that when you draw Fibonacci, just now the number is just for the guideline, right? They can, it can like wave 2 can retrace 38%, 50, 61, 78, or 88.6%, but cannot retrace or go below, which is 100%. This is, you cannot go below here. If go below like this, it's not Elliott wave anymore. So they can retrace anywhere between here, but cannot go below or beyond like X number or 100%, which is starting point. Okay, these are rules you need to remember. Okay, of wave 1. Okay, and wave 3 can never be the shortest of the 3 wave, which is wave 1, 3, and 5. It's called impulsive wave, right? Impulse wave, which is, I'll show you. Let's say wave 3 can be the shortest. Can never be the shortest, but it can be that longer here, like that. Okay, I'll be the longest like this. Okay, or it could be shortest, like the shorter of wave 3. This is considered Elliott wave as well, but it will be never be the shortest of the 3 wave, which is, let's say this is wave 1, the distance wave 1, and then this is wave 3 like this, and this wave 4, and then this wave 5. No, this is not called Elliott wave. Okay, the Elliott wave, the rules, 3 never be the shortest, can be like this one. Okay, can be longer but shorter than wave 5. That is possible. This is called Elliott wave. Okay, and 4, and what is about the next one? 4, wave 4 can never ever overlap with wave 1, meaning that you know that this is a wave 1. Okay, cannot overlap like this. If like this, if you see like that, okay, if you identify, okay, wave 1, okay, and then you see that, okay, wave 2 is not retraced below, okay, and then you see that, okay, this is going to be Elliott wave already, and then wave 3 the shortest, sorry, never be the shortest, but here it's a longer, right, than wave 1. And when you see wave 4 is go overlap, like, you know, of wave 1, this is not called Elliott wave. Okay, this is not Elliott wave. You need to follow the rules. Okay, it could be, you have to be, you know, above wave 1, cannot go below. Okay, okay, if the rule, okay, if there is a 3 rule is not meet, right, that is not going to call Elliott wave anymore, so it's not called the Elliott wave, so you need to follow. Okay, if you want to trade Elliott wave, these are rules that you need to follow. All right, so these all rules have to complete, and then you can trade like Elliott wave. Okay, let's say, okay, let's say like wave 4 like this. I have a question, and let's say, and like wave 5 is, let's say this is a wave 1, 2, 3, and wave 4, and wave 5, like that. Okay, like that. Okay, do you think it's consider Elliott wave for you? If you see, yes, okay, Jamaru say yes, correct. yeah, this is still considered Elliott wave because wave 3 never be the shortest of the wave 1, 3 and 5. Okay, so this is considered Elliott wave. Okay, so this rule you need to remember. All right, and let me move to the next one. Now this is, Elliott wave, complete Elliott wave look like. So basically what you can see over here, there will be impulsive wave, which is wave 1, wave 3 and wave 5, which is wave 1, 3 and 5. It follow the trend. Okay, and collective wave 2 and 4 is like, you wait for price to pull back. This is a collective wave, and they are moving against the trend. Okay, yeah, you need to, if you want to trade Elliott wave, right, you need to follow the rules. Okay, if one of the rule is not fulfilled, and then that is not going to call Elliott wave. Okay, you need to follow the 3 golden rules just now, and then the number, which is like those the retracement number, which is, let me go back, like this one, like wave 2, wave 3, wave 4, wave 5 is typically like retrace. Those, it's just a guideline. Okay, it doesn't mean like they have to exact retrace 50%. It could retrace like 51% or 52%. That is okay, as long as it's not go below wave 1, then you will get wave 2. What about wave 3? Wave 3 over here, they say that typically it can be extended to 161.8% of wave 1, which is wave 1 here. Let me delete. Okay, like this wave 3, they say that typically 161.8%, but sometimes it could go above 161.8, doesn't matter. Sometimes it can go to 200%, or it can go up to 127.2% Fibonacci extension. That also possible. This is just a guideline number. Okay, what about wave 4? Like I say, like always remember that wave 3, back to wave 3 again, should never ever be the shortest of wave 1, 3 and 5. All right, and wave 4, typically this just a number for them, like to retrace. The rule is that cannot go overlap wave 1. That's the rules you need to remember. And what about like wave 5, for example? Okay, back here, for example, let's say this is UJ. Okay, don't get confused, I will show you again. For example, here, you know that we already see that, okay, they're going to be Elliott wave, which is you see from here, there will be like 1, 2, 3, 4, 5, sorry, like 1, 2, 3, 4, okay, and then 5 is over here. So now we're going to like predict. Sometime you can use you don't get confused, yeah, because I will show you later over here, which is wave 4, wave 3. What you can see here, the rule. First, this is like where is my wave? Okay, wave 1 here. Okay, what you can see over here, you get confused or not? Because this one I just want to find the example for you. Okay, ABC. This is collective wave, right? I will tell you later. I move this one out first. Okay, and you say that like 1, 2, 3, 4 and 5 is there, and wave 4, what you can see over here, like wave 4 is not, it did not overlap wave 1, which is over here, right? What you can see here, and wave 2 is not retraced below of wave 1, which is not go below here. So this, yeah, correct, this is a Elliott wave. Okay, and I go back to bring back my ABC. Okay, and now I will bring you back to this one again, but let's just complete the Elliot wave picture first. Okay, what you can see over here, Elliot wave, they have 5 wave to complete. What that means, like, you know, 1 2 3 4 5 A B C, and this is complete or the Elliot wave cycle, and then they will start again like 1 2 3 4 5 like A B C. Okay, so just now it said like collective wave is move against the trend. Okay, and after they finish wave 5, then you will see that collective move, which is A, B, C, how it look like over here. And don't get confused, within the wave 1 or wave 3, like, do you know, impulsive wave, there will be small or sub wave. Okay, like here, here should have, like, you know, 1 2 3 4 5 wave, and then here will be collective, will be like A B C. Okay, and then here will be 1 2 3 4 5 and then A B C. Okay, how it look like is like here, like this. Don't get confused. Okay, over here is a good example. Okay, like wave, like 1 2 and then 3 here, 3 over here. I move the collective wave first, like here just now, right? There will be the sub wave, which is what you can see that in the wave 3 you will find the, you know, the sub wave, which is like 1 2 3 4 and 5 within the wave 3. Okay, and within the wave 3, which is wave 2 over here, or wave 4, you find the collective wave, which is, you know, like here, like A B C, which is the wave 4. How it look like is like this. Okay, like here. Okay, like wave 3 just now have 5 sub wave, and then from 3 to 4 you will see the collective move, which is like A B C. Okay, and here you find A B C, and then in the wave 1 you will find the sub wave, which is wave 1 2 3 4 5. Okay, anyone getting confused or any question? What time frame is the best to use to identify the main wave? It depends on the it depends on you, whether you are a swing trader or you're day trade. Okay, because if you, let's say you're a swing trader, you can go to daily time frame, even or like weekly. Okay, let's say if the weekly, you look for the weekly, maybe maybe I might find, for example, maybe here, for example, let's see, I can find the wave, maybe like 1 2 3, maybe I pick this as 1 2 3 4, and this I call 5. Okay, in weekly I think you might like see like this. Okay, and what you can see, and then here that we complete the wave, which is, this could be like A B, like A B C C, maybe should all the way here, or maybe just here. Okay, like complete already. Okay, let's say weekly it look like this, but when you go to daily, okay, let me zoom into the daily, you might see the sub wave in wave 1 or wave, where is our wave? Okay, I'm not sure where I can find one, but I try. Oof. Am I using this one just now? Yes. I'm using this one. Oh, here. Okay, let me just like put here instead. Okay, let's say I'm a swing trader. Okay, then maybe I go to the weekly, for example, and I go to the daily time frame to see if I can find like a subwave there. Is this here or not? Just now. Where am I? Okay, like over here in the wave. Like this may not a good example. You cannot find the wave over here, like small. Okay, this is not a good example. I think the current one is a good example. Okay, for example, if you're a swing trader, you can go to like weekly and daily, okay, or if you are day trade, right, you can go to like H4 and H1. What does this mean? For example, here, let's say I'm at like H4 time frame over here, okay, and then I spot the Elliot wave over here, which is in H4. I saw that okay, that will be Elliot wave, which is like 1, 2, like T4 and 5 all the way over there. Okay, and then you zoom in. I mean, you zoom to H1 to see if you will get the correct wave, which is in H1. I think I forgot to put, so you can see in H1 what you can see in the wave 3. Okay, that will be subwave, which is 1, 2, 3, 3, 4, and 5. Okay, this is your subwave. This is, you know, wave 5, which is 5 wave in wave 3. You get what I mean? Okay, so let's say if you want to see whether you are see or identify the correct wave or not, if you day trade, go H4 and then you go down to H1 to see. Okay, then what you can see here, this is a good example, okay, for the USD JPY, and then you can see in the wave 3 there will be sub wave, another 5 wave, and what about wave 4 here, which is in H4, right? In H4 you zoom in H4, there will be collective, which is A, B, like, you know, A, B, C, which is wave here, which is wave 4. Okay, and in wave 1 to 2, small one, they also have the collective wave here. What you can like A, B, and C. Okay. All right. So far, any one of you guys confused? I will try to go slowly, but the main thing that you need to remember is the rules. Okay, this rule, the rule, golden rule for Elliott wave. Okay, because you don't have to worry, because there are going to be 4 parts of Elliott wave. Just today it's just about the prep course for you guys, just to know the basic one. And for the next 3 lesson, okay, I will try to go in depth. Okay, because there will be a lot of motive wave, or there's so many things. Just want to like slowly for you guys to get use of all these rules and use Fibonacci retracement and projection correctly. Okay, any one of you guys curious about this? Okay, so now, oh, I think UJ is go to the moon. Go to the moon already. Okay, so I thought like, okay, for UJ in H4, I thought like, okay, these are in a wave 3, and then I thought that it could be like A, this could be A, B, and then could be C. But in this case, I think they still like keep going up, so it's not going to like end up like ABC. There is no ABC here. Okay, so far you guys okay? So about this, I will move on. Okay, I think you guys okay, right? So far. Okay, now just with my okay. So these are just you need to like remember this. Okay, for the rules and for the retracement number, sometimes if you cannot remember, you can just Google. Okay, it's just that what you need to remember, like I always say, if you want to trade Elliott wave, just remember that true cannot retrace, wave 1 cannot go below here, okay, and wave 4 easy to remember, cannot overlap wave 1, and wave 3 can never ever be the touches of the wave 1, 3, and 5. And after impulsive move, which is wave 1, wave 3, and wave 5, is always move follow the trend, and wave 2 and wave 3 is retrace, they will move against the trend. Okay, after they finish the wave 5, which is you can like use Fibonacci for project your TP, for example, your target. Let's say if you want to trade, right, you trade like wave 1, wave 3, and wave 5, and then you see that okay, then it will be ending with wave 4, and then you can use either Fibonacci projection, which is you draw from like wave 1 plus wave 3, you will get wave 5, the distance, and then you can see that okay, this might be ending of wave 5, which is you will put your TP over there. After that, finish wave 5, and then there might be like corrective move, which is A, B, C, and then there might be another like, you know, like 1, 2, 3, 4, 5, still like, you know, continue the Elliott wave cycle. Okay, now if you ask me which wave you should trade, okay, let's say you know that we always say that right, trend is your friend. For example, you know that price is on uptrend, okay, maybe I use another goal. Okay, I think I find the Elliott wave over there. Okay, we know that like gold, there's a Elliott wave over here, I find. Okay, what you can see here, over here, if you want to follow trend, okay, you need to trade, okay, wave 1, wave 3, and wave 5. If you want to trade again the trend, you must be very sure that you trade like wave 2 and wave 4 because they move against the trend, right? So in over here, back again, usually you will find like, you know, within the wave 1, 3, or 5, there will be sub wave, which is like, you know, over here, assume for you, you will know that okay, this is like wave 2 always be starting point, which is here, like you know, 1, 2, 3, 4, and 5, which is 5 wave, which will be wave 3. Okay, within wave 3 there will be always be like 1, 2, 3, 4, and 5 sub wave. Okay, and within the collective wave there will be like A, B, C. It could be like A, B, and C here, which is wave 4. Okay, and wave 4, like wave 5, there will be sub wave, which is could be I try, okay, like 1, this one have 1, 2, 2, no, let me try 1, 1, 2, 3, 4, 5. Okay, and wave 3 not overlap. Okay, you see within wave 5 there will be sub wave here, and now it's ending with wave 5. Now I thought like okay, there might be corrective move, which is like, you know, A, B, C, but in this case it seems like they're going up, so I'm not sure whether it will be like C here. Okay, that might be because now it's at the support level, not the resistance. Okay, you get what I mean so far? Okay, what behavior is expected after wave 5? What should trader keep the eye on? Okay, for the TA, right? Usually, okay, for the complete Elliott wave, okay, after like wave 5 there will be a collective move. Okay, that'll be like ABC. Usually, okay, if they're ending with the wave 5, over here there might be something like resistance level, okay, and after that there might be like a ABC corrective move, and then after that gonna be like from uptrend become downtrend. It depends. What does it mean? Let's say okay, we go back here over here. So here I'm still thinking that, you know, there will be like after ending with wave 5, what a wave 5 over here, this is a resistance level, okay, and I just put level here because I won't adjust. If you were to zoom in over here, okay, it will be like resistance level, okay, and let's say in like wave 4, infinite wave 4, which is over here. Let me remove this one. Oh no, like wave 4 over here, right? And wave 4, how you get a wave 4, which is you use the retracement of wave 2, which is this is wave, your wave 2 over here, for example. Okay, you draw retracement from here to here. You can over there they say that they retrace 50, 61 or 38, but they cannot, you know, retrace more than wave 1, which is here, right? In this case they retrace almost 50% here, so these are correct. Okay, and then now you get a wave 4. What about a wave 5, right? Wave 5, remember, you want to get a wave 5 either, let me remove all this number, okay, so you can get, let's see. So now let's say we want to like predict, okay, we want to see where is the wave 5 ending. Either you use projection, which is this, a projection already bookmark, okay, projection which is 100%. Sometimes you like 100%. Wait, this is, for example, you project, okay, that might be too far. I think that's too far. There will be like wave 1 plus wave 5 here. You pull down here is where is my, sorry, that's wrong. Again, use a projection, okay. Wave 1 plus wave 5, use projection here. Let's say that could be, I think I'm blur. Where is my, okay, 61.8%, that will be there. Example, we think that, okay, wave 5 could be ending here. And then we also use the 100% projection. I mean 100% of wave 1. Okay. Okay, the number is saying like that. This, you would think that, okay, this is could be your ending of wave 5, for example, like 2080. Okay, but over here, what you can see here, okay, what you can see here, one price is reached the like the resistance level, and here, and now you say, oh no, it did not go there, now it just go up here. This still considered Elliot wave, okay, this is a wave 5. This is just a number, just a guideline for you only, okay. It doesn't mean that, you know, have to all the way waiting here. For example, like you buy from here and then you put your TP here, because they say that the Elliott wave number is somewhere around here. No, it's just for the guideline, okay. But over here, what you can see here, first you know that, okay, this is a resistance level, okay, and then price will go above like wave 3, and then you have to like monitor, okay, at least if you buy from here, your TP should be your like the resistance level here at least. Or if you doesn't know, you can use Fibonacci extension, which is what you can see here, 127.2 Fibonacci extension. This is your TP, because, okay, there are many traders, they are using Fibonacci to trade. So basically they are using Fibonacci extension. Now I'm going to use Fibonacci extension for my TP, which is you can use Fibonacci 127 extension or 161.8% extension for your TP. Okay, this is your TP. First TP is here, and let's say it hits your TP already, that's it. Okay, and then what you can see after you hit your TP, and then it's like a reverse from that level, like 2008, like 0.7, which is exact number here. You get what I mean? Okay, so the number is just for the guideline for you. Okay, or if you only trade by using Fibonacci retracement, which is I could show you here. Okay, like what you can see here, Fibonacci retracement, right? And then you can use Fibonacci like extension for your for your TP. Okay, if you cannot really like find the wave 5, basically you just use Fibonacci extension. Fibonacci extension, which is whatever number is above 100%, we call Fibonacci extension, which is 127.2 and 161.8%. Okay, and then you okay, starting point, whatever above 100%, we call extension. Okay, just remember that, because sometimes if you see either like YouTube or anyone they're talking about Fibonacci extension, and then you already know that, okay, they are talking about whatever number is above 100%. Okay, it's called extension. And what about the projection over here? The projection number will be 61.8, 78.6, 100% projection, which is just now I said that wave 5, okay, usually is 100% of wave 1. Okay, we use a projection to draw that, remember. And what about wave 5? We also use Fibonacci projection as well, which is you draw form like, you know, wave, let's say put here like 1, 2, 3, like 4, 5. Oh no, it's not nice. Again, okay, let's say like 1, 2, 3, 4, 5. Okay, like this, like wave 1, 2, 3, and you use projection to get wave 5, which is you can draw your starting point here, wave 1, 3, 4, 2. Okay, this could be wave 5. You draw starting point over here, you draw from here, and then you draw here, and then you will get a project somewhere here, which is wave 5. Okay, remember? So this is a Fibonacci projection. You always have to find 3 points, which is starting point, ending point, middle point, ending point, and then you will project somewhere around here. Okay, this is called Fibonacci projection. All right. Okay, guys. Any question? You guys clear about this? Okay. Again. Now, I remove. Just want to show you. If you were to ask me, okay, over here, you know that there will be a lot of, you know, Elliot wave over here. Usually, mostly we only use impulse wave, which is 1, 2, 3, 4, 5, and collective wave, which is ABC. So it's always complete the Elliot wave 1, 2, 3, 4, 5, and then here will be A, B, C. Okay, something like that. Really, if you really trade by using Elliott wave, right? A lot of the trader they only use Elliott wave. If you ask about successful of this strategy, can say that 95%, because you know the okay, the powerful of the Elliot wave is that they help you or the trader to predict where the price will be ending. Okay, you can go back and then back test this strategy, because this strategy needs a lot of time, because you need to look at the chart. For example, let me try to look for, okay, again, if you see me already here, this is I'm waiting to sell at this level. Okay, this level, if my price come, I've been waiting for like 1 or 2 weeks ago. This is a level that I'm waiting for. Okay, for the GBP. Now it's rising already. Okay, let's just move to another wave by the, let's say, okay, maybe here. Let's try to look if I can get one. I'm not sure, but let's try. For example, this could be like 1, 2, 3, 4, 5. Okay, yeah, the rule is that one cannot go below this point. Yes, it's not. And they say that, what about wave 3? In this case, I think they're quite like can extend it to, it's very rare, you see. Okay, for the wave 3, 161.8% or 2.61 or 261.8%, or sometimes it could go up to 3.618. Basically, I think I changed to the percentage. Okay, you see. Okay, like I say, wave 3 is extremely very rare that it will go up to 361.8% protection. But in this case, what you can see is ended at 361.8% protection. These are wave 3. Okay, so now ending of wave 3. Okay, and what's about wave 4? What you can see, wave 4, of course, it retraces from wave 1 to wave 3. You pull out all Fibonacci. Okay, it retraces between 23.6% and 38.2%, which is retraced here. Okay, what about wave 5? Okay, wave 5 is say that the number is say that it could use wave 1 plus wave 3 at 61.8%. Okay, in this case, it's here. Okay, that's too far, but because in this case, they're only ending with only this one. Okay, that's possible because wave 3 is the longest one. Wave 1, wave 1 and wave 5. This is complete Elliot wave, but then after that you will see whether there is a ABC. I'm not sure, but ABC here. Okay, but could be something like that. Okay, that already completes the cycle, and after that they already move up again. But it's not Elliot wave, but this could be if I were to look like that, there will be another wave, like for example, could be like maybe 1, 2, 3, 4, and 5. Okay, you get what I mean? Okay, and then when it's here 1, 2, I'll call 2, it not go or retrace below, which is if you were to use Fibo, you draw starting point, ending point, they retrace 78.6%, or it could be retrace 88.6%. Okay, but not go below 100%. So this is okay. Wave 2. Okay, and wave 3 is here. Wave 3, how to get a wave 3? We use Fibonacci projection. Okay, 1, 2, and 3. This could be 161 or 361.8. I think they get 2. Okay, here is wave 3. Okay, Doesn't mean like have to be exact, but this is just a guideline number. Okay, this is a wave 3 and wave 4 is never overlap wave 1. This is the rules, right? You can see that it's never overlap wave 1. And this is the wave 5. Okay. In this case, it's still Elliott wave, right? Because wave 3 is not shortest of the wave 1, 3, and 5. It's longer than wave 1, but it's shorter than wave 5. It's still called Elliott wave in this case. Okay. All right, guys. Any questions so far? I hope you guys learning something. Okay, this is just for like the prep course, the like like quite a basics one. And for the next 3 webinar, I will go in depth with you how to to trade, how to find the collective or motive wave, or there will be a lot of things for you to remember. Okay. All right, guys. Okay, I will launch the poll. I hope you guys can help me rate these webinars, and I hope you guys learning something today. Okay. I mean, like if you remember all the rules, okay, it will be easier for you to trade Elliott wave, all right? Because there's a rule. It doesn't matter, like they retrace how many percent or Fibonacci level. It's just that as long as it's not retraced more than like it's really easy to remember, which is like doesn't matter they retrace how many percent, but as long as wave 2 is not go below wave 1 like this, okay, it's not go until like that, it's still considered. And wave 3 will be be the shortest of the wave 1, 3, and 5. Okay, and wave 4 cannot overlap wave 1, like here wave 1 cannot like this. Just very easy to remember. Okay, they can the number of the retracement doesn't matter as long as they cannot go below this one. It's still considered Elliott wave. And like I say, wave 3 can be longer than wave 1 and can be shorter than wave 5. It's still considered Elliott wave. Okay, guys. Guys, thank you so much for joining me today. Okay, and I think we'll be seeing you guys again. I think it should be next week. Okay, that will be another 3 series of Elliott wave. Okay, you're gonna be me. Okay, I will teach you guys. Don't worry, I will go and explain for you guys until you guys know how to trade by using Elliott wave. All right. Okay, guys, thank you so much, guys, for joining me today. I hope you guys learning something. All right, see you guys again for the next webinars. Okay, take care. Bye for now.